In today's fast-paced world, technology has become an indispensable ally in the financial planning process. While we may not possess a crystal ball to predict the future, the right technological tools can provide us with insights and efficiencies that make managing our finances feel almost prophetic. Whether you're a business owner looking to enhance your financial strategy or an individual just starting your journey, there are a plethora of solutions at your fingertips, all designed to streamline and elevate your financial planning efforts. First and foremost, let's explore the types of financial planning tools available for businesses. These tools are essential for managing finances, forecasting future performance, and facilitating informed decision-making. Budgeting tools, for instance, are a cornerstone of effective financial planning. Applications like Mint and You Need a Budget, YNAB, enable users to create detailed budgets, track actual expenses against planned budgets, and make necessary adjustments. By ensuring that you stay within budget, these tools help manage cash flow effectively, allowing you to allocate resources where they're needed most. Accounting software is another critical component of financial planning. Programs such as QuickBooks, Xero, and FreshBooks automate bookkeeping and financial record-keeping, significantly reducing the likelihood of human error. By managing invoices, expenses, payroll, and financial reporting in one place, these applications simplify the financial management process and free up valuable time for strategic planning. Investment tracking platforms like Personal Capital or Morningstar offer invaluable insights into the performance of your investment portfolio. They allow users to monitor asset performance, assess risk levels, and evaluate overall portfolio health, ultimately leading to more informed investment decisions. Additionally, forecasting software such as Adaptive Insights and Planful is crucial for predicting future financial performance based on historical data. These tools enable businesses to create financial projections, analyze trends, and prepare for various scenarios, aiding in strategic planning and budgeting. Enterprise resource planning, ERP systems, like SAP and Oracle ERP, integrate all business processes, including finance, into one cohesive system. This integration provides a unified view of financial data, allowing for more streamlined operations and improved decision-making. Expense management tools such as Expensify and Concur help track and control spending by automating expense reporting, approval workflows, and reimbursement processes, thus enhancing visibility and control over expenses. Financial reporting tools, including Tableau and Power BI, generate detailed reports and dashboards for analyzing financial performance. With advanced data visualization capabilities, these tools help interpret complex financial data and communicate insights effectively. Each type of financial planning tool serves a specific purpose, and selecting the right combination can significantly enhance your financial planning process. Now that we have a grasp of the available tools, how do we choose the right financial planning software? The importance of selecting the right software cannot be overstated, as it directly impacts your business's financial health. Begin by understanding your specific needs. Are you focusing on budgeting, forecasting, or comprehensive financial management? Small businesses may benefit from simpler budgeting tools, while larger organizations might require more sophisticated systems that integrate various financial functions. Consider the size and complexity of your business as you evaluate options. For instance, small businesses often thrive with user-friendly software featuring basic functionalities, whereas larger enterprises may need advanced solutions capable of handling complex financial data. Once you have a shortlist, compare features and functionalities to ensure they align with your requirements. Essential features may include budgeting and forecasting capabilities, expense tracking, reporting and analytics, and integration capabilities with other systems. Usability and user experience are also critical factors. A complex interface can hinder productivity, so opt for software that is intuitive and easy to navigate. Look for customizable dashboards and drag-and-drop functionality to simplify data entry and analysis. If possible, take advantage of free trials or demos to assess the software's usability before making a commitment. As your business grows, so will your financial management needs. Therefore, scalability is an essential consideration. Choose software that can adapt to increased data volume and more complex financial scenarios, ensuring that it can grow alongside your business. Cost is another significant factor. Financial planning software comes in various price ranges, so weigh both initial costs and ongoing expenses against your budget and the potential benefits of the software. Integration capabilities are vital for streamlining operations. The software should seamlessly connect with existing tools, such as accounting systems, CRM platforms, or payroll services, to reduce duplication of work and improve data accuracy. Additionally, security features cannot be overlooked. Ensure the software includes robust security measures, such as data encryption, user authentication, and regular updates to protect sensitive financial information. User reviews and recommendations can provide valuable insights into the strengths and weaknesses of the software you're considering. Research testimonials from other businesses in your industry and seek recommendations from industry peers or financial advisors. Finally, test customer support options to ensure reliable assistance is available whenever needed. Once you have assessed all these factors, make an informed decision. Choose software that aligns with your business's size, needs, and budget. By thoroughly evaluating your options, you can select a solution that enhances your financial planning and supports your business's growth. Automation is another game changer in streamlining financial tasks. By eliminating the need for manual data entry, automation tools can significantly reduce errors and save time. For instance, automation can import data directly from bank accounts and financial systems, ensuring accuracy and consistency. This means that instead of spending hours entering data into spreadsheets or accounting software, you can focus on more strategic tasks that drive your business forward. Expense tracking becomes effortless with automation as well. Automatic categorization of expenses based on predefined rules means no more manual sorting of receipts or invoices. Real-time monitoring allows you to track expenses as they occur, providing immediate insights into spending patterns. This clarity helps you maintain a healthy financial position without the hassle of manual entry. Invoice management is also streamlined through automation. Automated invoice generation ensures that invoices are created and sent based on recurring billing schedules or predefined templates. Payment reminders can be set up to reduce the need for manual follow-ups, ensuring timely invoicing and improved cash flow. Payroll processing, often a time-consuming task, can be simplified through automation. Automated systems can calculate salaries, manage benefits, and ensure that employees are paid accurately and on time. This not only reduces errors, but also enhances employee satisfaction. When it comes to financial reporting, automation can generate reports automatically based on real-time data, providing timely insights into financial performance. This allows for better decision-making and strategic planning. Tax preparation, often a complex process, is made easier with automation as well. By tracking deductions and generating necessary documentation, automation ensures compliance and accuracy during tax season. Budget management is improved through automated budget updates and scenario analysis, which allows you to track actual spending against budgets in real time. Alerts for budget variances help you stay on track, while automated systems enhance financial controls by setting up alerts for unusual transactions or budget overruns. Cash flow management is critical, and automation aids in forecasting future cash flow based on historical data and trends. By scheduling and automating supplier payments, you can reduce late fees and maintain good vendor relationships. Additionally, enhanced data security measures, such as secure data storage and regular backups, protect your sensitive financial information. Artificial intelligence, AI, is another transformative force in financial planning. AI enhances data analysis by processing vast amounts of financial data quickly and accurately. This capability allows for the identification of patterns and trends that human analysts might miss, leading to more informed decision-making. AI also improves forecasting by utilizing predictive analytics to forecast future trends and run multiple scenarios based on different variables. This enhanced forecasting capability supports better strategic planning and budgeting. Automation of routine tasks is another benefit of AI. For example, AI tools can automatically categorize expenses, manage investment portfolios, and generate financial reports. This not only reduces administrative burdens, but also increases operational efficiency. Personalized financial advice is made possible through AI-powered robo-advisors, which provide tailored investment advice based on individual goals and risk tolerance. AI also plays a role in risk management by using historical data to predict potential risks in fraud detection systems to identify unusual patterns in transactions. Compliance with financial regulations is simplified through AI, which monitors regulatory changes and generates compliance reports automatically. This ensures that businesses can adapt to new regulations while maintaining accurate records. Customer experience is enhanced through AI as well. Chatbots and virtual assistants provide instant support and answers to client queries, while interactive dashboards offer real-time insights into financial status and performance. Cloud-based systems are revolutionizing financial planning by providing enhanced accessibility, improved collaboration, cost efficiency, and automatic updates. With cloud solutions, financial data can be accessed anytime and anywhere, ensuring that decision-makers have the most current information at their fingertips. Collaboration is streamlined as multiple users can work on the same financial document simultaneously, reducing the need for back-and-forth communications. Cost efficiency is realized through reduced IT costs and scalable pricing models that allow businesses to pay only for what they use. Cloud-based systems also offer enhanced security through data encryption and regular backups, ensuring that sensitive financial data is protected. Scalability and flexibility allow businesses to adapt their financial planning tools as they grow, while integration with other tools improves efficiency and consolidates data across platforms. Real-time data and reporting capabilities enable businesses to make informed decisions based on the most current information available. Improved disaster recovery ensures that data is safeguarded against local disasters, providing peace of mind for businesses relying on accurate financial records. Data analytics is another game changer in financial planning. By transforming raw data into actionable insights, data analytics enhances decision-making, optimizes budgeting and forecasting, and strengthens risk management. With the ability to monitor actual spending against budgets in real time and run various scenarios, businesses can prepare for best and worst-case scenarios. Data analytics also drives strategic investments by identifying opportunities and evaluating performance. Effective cash flow management is supported through forecasting and optimizing receivables and payables, ensuring liquidity and financial stability. Financial reporting is enhanced through automated reporting and customizable dashboards that provide better visibility into financial health. Strategic planning benefits from data analytics as organizations set realistic financial goals and track progress toward those targets. Operational efficiency is improved by identifying inefficiencies and optimizing resource allocation. Enhanced customer insights through behavior analysis and segmentation lead to improved client relationships and tailored financial planning solutions. Cybersecurity plays a critical role in financial technology, ensuring the safety and integrity of financial data. By protecting sensitive data through encryption and access controls, cybersecurity measures prevent unauthorized access and data breaches. Fraud detection systems and anti-money laundering tools help to identify and prevent illegal activities, while compliance with data protection laws ensures that personal and financial data is handled appropriately. Effective threat mitigation reduces the impact of cyber attacks, securing transactions, and enhancing user trust. Blockchain technology offers transformative potential for financial planning by improving transparency, enhancing security, and streamlining transactions. With immutable records and detailed audit trails, blockchain increases trust and accuracy in financial records. The ability to automate contract execution through smart contracts reduces the need for intermediaries and speeds up processes, leading to quicker transaction settlements. Cost reduction is realized through lower transaction fees and operational efficiency, while blockchain also aids in regulatory compliance through automated reporting and audit readiness. Machine learning enhances financial forecasting by improving accuracy through predictive models and continuous learning. By managing large data sets effectively and identifying patterns and trends, machine learning supports risk management and automates forecasting processes. Integrating fintech with traditional financial planning strategies creates a powerful synergy that combines modern technology with established principles. By assessing needs and goals, choosing the right fintech tools, and integrating data and systems, businesses can leverage the benefits of both worlds. Regularly monitoring and adjusting the integrated approach ensures that it remains effective and relevant in a rapidly changing financial landscape. Staying current with emerging financial technologies is crucial for leveraging innovations and maintaining a competitive edge. By following industry news, attending conferences, engaging with professional networks, and investing in continuous learning, businesses can remain informed and agile in their financial planning efforts. In conclusion, technology has fundamentally transformed the financial planning landscape. By leveraging the right tools and strategies, individuals and businesses can enhance their financial management processes, streamline operations, and make informed decisions that lead to long-term financial success. Embracing technology is not just an option, it is a necessity in today's dynamic financial environment.